Episode of the Trading Bell. Today on the program we have a special guest, and that is the Group CEO of KCB, Joshua Oigara. Joshua Oigara will be talking to us about the bank's next move following the acquisition of National Bank of Kenya. What does this mean for the banking sector as well as to the customers and shareholders at the end of the day? But before we get into the interview, let's take a quick look at Joshua's profile.
Joshua Oigara, CBS, is a member of the KCB Group PLC and KCB Bank Kenya boards, as well as the KCB Group Chief Executive Officer and Managing Director. He is the chairman of the Energy and Regulatory Commission of Kenya, a director of the Vision 2030 Delivery Board, and he was commended by His Excellency President Uhuru Kenyatta on the award of Chief of the Order of the Burning Spear, CBS, for exemplary service to the people and nation of Kenya. He is also the chairman, Kenya Bankers Association, the banking industry lobby. Listed as one of Africa's top 25 leaders to watch based on his role to champion transformational leadership and change on the continent by the Financial Times, Joshua actively engages at national and industry levels to drive this agenda. Joshua was named among the top 100 youngest and most influential economic leaders in Africa. He was recently named CEO of the Year in East Africa by The Banker Africa and captains the largest indigenous bank in the East African region with assets of over $6.5 billion and a market capitalization of over $1.4 billion.
Thank you, Joshua, for making time for us today.
Thank you, Abby, for hosting me.
All right, Joshua, historic day for the exchange and also for KCB, where we're seeing the listing of shares actually for following the acquisition of National Bank of Kenya. And there's a lot of hype around this. And perhaps why is there excitement really?
Well, you know, because first we are coming to the exchange to raise money.
Sure.
Yeah, I mean, there are many people saying, can I really go to the Nairobi Securities Exchange to raise capital to be able to expand my business? And we are saying in this morning that it is the place to go for listed entities. It's the place to go for new entities that wants to come into the market. And lastly, that we are able to do the transaction in a short period of time. So that is the excitement. Now we are listing today 142.9 million shares of market value of over 6 billion. Yeah, that is, and we've raised that money in the exchange. That for me is the excitement we face today in our market.
Of course, interesting times for the banking sector. And Joshua, for the customers and of course for the shareholders across the board, what does this mean really when you look at the big picture?
So this, I would say there's like many beneficiaries. You know, if I pick the most critical ones today, is the customers of the National Bank and the bigger KCB Group. Because before, they were not getting enough access to capital, so liquidity was a challenge because we didn't have enough capital. Number two, in terms of investment in new technology and systems, that has dragged behind. And number three, there was always this kind of fear, what's going to happen with my bank? Is it going to exist or not to exist? And the banks have, customers have a very long relationship with their banks for a long time. It's proven in our markets. If you look at the data which was done by the FSD, the Financial Deepening Department today, you find that customers actually stay on quite longer for their institutions. The number two is the shareholders. NBK had 54,000 shareholders who had kind of been locked in a stock that they didn't want to exit because the market value had been coming down very dramatically.
Sure.
Remember at one time NBK was valued a share at almost 10 shillings. By the time we did this transaction, the share price when BK was 3 shillings and maybe 25 or 30 cents. So that contraction of value wasn't a real, the bank never lost the assets. Yeah? So I would say that there was a delta adjustment, which was not based on a market valuation. And then lastly, the entire banking industry. So this is the 10th transaction in the financial sector, which is a consolidation. And it is the largest transaction today. So we've been seeing that over time, markets are getting consolidated, customers are getting fewer choices, but banks are becoming stronger. And stronger banks are good, not just for our customers and shareholders and community, but they're good for the country and they're good for economic development.
All right. And Joshua, you've touted this takeover as a friendly takeover. Of course, we've seen in other jurisdictions where there are hostile takeovers.
Correct.
And from your experience, of course, being the big brother in the banking sector, of course, also handling matters to do with other banks that were in distress. For KCB, what vibrancy does this bring to the brand KCB and, of course, the roadmap in terms of growing the bank and growing the financial sector at large?
It's very exciting for us. So first, we are the only bank with 2 banking licenses in the market. So it tells you, you asked me about friendly takeover, is our history.
Yeah.
Remember that we are not always the big brother. Our history shows that we also at one time had difficulties. We've grown to become the largest institution. So what I will say that we see 2 main distinct value of this acquisition. We are very much aligned on our customer profile. So if you look at our customers in the energy sector, manufacturing sector, and other people like in real estate, construction, oil and gas, we are very much aligned between KCB and NBK, and also a couple of other banks. And number 2, in terms of our retail side, we are a big bank that actually has customers from government, both national government and county governments, and what you call the departments and agencies. So that we're very good at. We run that model. We are a big collector of taxes on behalf of the Kenya Revenue Authority, and we've worked that very closely for many years. So what we'll do is to strengthen, so go for more market share. So that is the other excitement. So we have, the 2 banks today have a market share of 20%. Our real ambition is to increase that market share by 500 basis points in 3 years. That's a real ambition. Market shares in our markets don't change that much. And then lastly is to make sure that because NBK gets capitalized, we have a new brand. There's nothing as exciting like us as KCB owning a very strong brand with a lot of heritage as NBK. So it's a co-creation that we can have 2 strong institutions available. I mean, the capital adequacy issue will be fixed because we'll invest in this organization. Then we can now scale up opportunities for growth. We want to go into small and medium enterprises as a catalyst for growth. We are able to provide funding. If we want to the digital lending space through mobile and payments, we are able to provide a solution for itself. What we may also do is to consolidate the back-end systems of the 2 banks to make it seamless, a one-stop shop. But we are not asking our customers to change their account numbers. We are not asking our customers to be able to come to the bank and get their documentation done. We are not asking them to change a new system. So in many ways, our customers are taking off. So what we were doing was enabling scaling. So if I asked to me, what will a customer of NBK do tomorrow? Go to your branch, get your relationship manager, ask for your requirements, get support, reach them on their social media, call them, WhatsApp them. You will get the feedback from the bank.
All right. And Joshua, what will this entail, especially to the ordinary customer sitting down in northern Kenya who is wondering, will KCB rebrand this bank? Will we see a bit of branding happening? At the same time, the same customers also keen to know what plethora of products should they expect now that they're seeing KCB coming in with a stronger financial muscle, or should I say a capital base that is quite enormous?
So if I look at our customers, so we continue to run 2 products. So we have got the normal conventional banking product that we operate under NBK and also KCB. And also we have an Islamic window, what we call a Sharia compliant window, which we operate under NBK, what we call Amana, or KCB, we call it Sahal banking. Now those 2 will continue, and a number of our customers, whether they're in Nairobi or they're in Garissa, Mandera, Wajir, they're Turkana, they're Lokchogi, all that, those customers, even all the way going down into Mombasa, Lamu, you will find Garsen, you'll find that there's a lot of activities in terms of this. So we are not rebranding. Yeah. Well, you may see a new coat of paint, but that is just making sure that the colors for NBK are visible. KCB colors will remain. The branches will remain. So there is optimization of the branches that we will have. NBK has got nearly 80 branches, but the ones which are really operational today are 70. And we have got 200 branches. So in a way, we work to optimize where we can see the best value. But this is what I say to the customers of NBK. As long as they're able to come and support their bank, come in and get the trade services, get all the opportunities they need from the institution in terms of the lending product, account opening, their deposits, the branch will continue to remain. So we are not today in a crisis of shutting down the branches for NBK or KCB. It's not the ambition. So for my customers who are sitting in northern part of Kenya or anywhere, I will say visit your branch. Yeah, it's much more vigorated. It has got the capital it needs. The services will come back that were not there before. So we will keep the best of both institutions.
Okay.
So you're asking me about new products. So we are very strong on the digital, especially on mobile.
Yeah.
Agency banking we have, our merchant businesses that we have, our lending products which we'll have. So that will continue to build. Our own social investment program like Tujajiri will extend into what we are doing in NBK today. And I see this as the best of both worlds. It's perhaps one of the most historic transactions in the financial sector, and perhaps that is why it was done in a very short period of time.
Okay. And Joshua, allow me to pick your mind as well. Now that we are having this takeover, of course, we anticipate there'll be a bit of shakeups in terms of the boards. And perhaps if you could give us some insight. I recently saw you appointed a new MD to lead NBK. And of course, what is in the pipeline, especially when it comes to having key human resource to champion this next phase of the bank?
Yeah, so that's very correct. So we've appointed one of our most experienced senior management member, Paul Russo, as a new managing director for National Bank. And this I would say is a natural process, because once we have got a new team that is running the bank with a greater vision, changes in management are generally inevitable. But we have also given the former managing director, called William Musau, a responsibility within KCB in terms of being able to support the integration.
Yeah.
So we are keeping both worlds. But your specific questions around what will you do with the management team? So I speak to all my staff, and we have almost 1,200 to 1,300 staff today in NBK. And we have almost 8,000 staff at KCB today on all our businesses. So those that have continuously worked hard, delivered on their objectives, all their staffs will keep their job. Yeah? And that's what I've seen from my few interactions with themselves.
Yeah.
So a new management team with KCB under NBK will largely be the people that have been running NBK. So I will not say that there will be a revolution. There will be few new ones. I see that they have roles which have not been filled today, so they have some what I call vacancies, and those will be filled up sometime between now and December. The only thing we are waiting for now is a new board. So it's true, we said we are reorganizing the board of NBK. So the chairman, who has served NBK for 10 years, has expressed to retire. And I'm very much grateful to Mohammed Hassan. I've known him for many years. And so we will have a new chairperson, we'll have a new board. We're expecting approval from the central bank this month of October. So when that is unveiled, you then have a new team. So Paul will run, it's a team of, I say, 10 senior leaders. Most of them will actually be the ones that will be running NBK. But the performance for our staff is what will determine, like anywhere else, whether you remain in the organization of NBK. You get me? So I mean, there's a big concern that as people are going to leave. So I want to encourage my staff. The fear that they are going to lose their job is unfounded.
Okay.
Yeah. If they are delivering their work, and I mean, so now we are looking at the performance of NBK and said, I've got my goals and priorities for the year. What I should be doing is chasing my effort to delivering them. Okay. And that's what gives you the job, nothing else.